US dollar is taking a massive hit, seeing lows that we have not seen since December 2023. In this video, I want to go over where the dollar is headed and what is actively happening with my open trades against or alongside the dollar. Without further ado, let's get right to it. Welcome back. If you're new to the channel, my name is Matt Jimenez. I'm an entrepreneur who has worked with the greatest minds in finance over the last several years, and I'm here to pour into you guys everything important to me. Today, I want to go over exactly what I'm looking at in the dollar to track where it's headed, and more importantly, show you guys exactly what's going on the back end. Meanwhile, my software is running and taking trades with all this dollar volatility. Now, with that being said, let's jump straight to the charts. Here is the dollar index on a weekly chart. And if I just zoom in a tad, you could see the last time we've seen any price down in this region was all the way back in December 2023. I believe a lot of this move is the actual price in of the premise that we're having a rate cut for the US dollar. And as you can see, the dollar is just completely tumbling in strength all the way since end of July when this whole move started, which was back when the Fed account experienced all of that volatility. If I go ahead and grab my measuring tool, let's see how much it's already dropped since the end of July to current date. We're down 4% so far on the US dollar. And as you can see, I drew this trend line down here to show where I thought the dollar was headed. Now this move here where we had this bounce then led me to draw this trend line where we can see price action come down and wick right on it and look like it was going to be rejected, which was short-lived because it just left a wick right off the trend line and just tumbled right back over. Now going ahead and zooming in a bit further on a daily chart, as you can see, the dollar is approaching previous support around 100.780. And the reason why I make a rectangle is because with support and resistance lines, it's never an actual exact number. It's always a range. So this rectangle allows me to conceptualize we are in a range of support. Another thing that I'm looking for is price to push down into this region here and make its way back up to these moving averages, because whenever we have a move heavily extended away from moving averages, typically you'll have price trend back in the direction to come closer to the moving averages. Now jumping over to NZD USD, this is the pair that I have active trades on, and quite a few to say the least. As you can see, price came down from this top of the wedge and bounced right off previous support, and we popped up over to the moving averages. This purple one right here is the 50, which we tumbled right over and it sold off quite nicely. And of course it bounced right at previous support, so we bounced here, came down, touched again, and now we're bouncing to the top of this wedge. And right now we're currently meeting this moving average, which typically does have some type of interaction with price action. And if we wanted to look at that, we would just go ahead and drop down to a smaller time frame to see what is happening right now in current price action, because this is a weekly moving average. So if I just go down to a 1 hour, we could see if we are experiencing any type of rejection. Oddly enough, there is no rejection in that region. Typically with the higher numbered moving averages is where you'll see more of the respect. And what I mean by respect is a reaction. So the 50 is the first line of defense, then it would be the 100, and then all the way onward to the 200, which I do not have plotted at the moment. Now, as I said earlier, I believe that this move is being fueled by the premise of a rate cut for the US dollar, and a lot of this move is already priced into the price action. So when the move does happen, a lot of the price action has already followed the prediction of the cut, which is of course bearish for the dollar. We had really bad employment numbers in the US come out not too long ago, and this came out dollar slumps ahead of payroll revisions, Powell speech. So Jerome Powell is one of the members of the Federal Reserve who helps with monetary and fiscal policies. And in this article, it states Goldman Sachs economist expects that 600,000 to 1 million fewer jobs were created for April 2023 to March 2024, previously reported. A downward revision of 1 million jobs would mean 1.6 million jobs were created in that period, down from 2.6 million initially reported, said Mack, chief market strategist. Now here is the most important part. The prospect of a weaker labor market is why traders continue to price in potential 50 basis point cut in September. Chandler said people thought the Fed was behind the curve in raising rates, and now many people think that the Fed is behind the curve in cutting rates. Traders reduced the bets that the Fed would cut its benchmark overnight interest rate by 0.5 percentage point. Traders reduced bets that the Fed would cut its benchmark overnight interest rates by 0.5 percentage point at its September 17th, 18th meeting following the hotter than expected shelter inflation and strong retail sales in July. So currently it is the month of August and we are just finishing up the month, and we're headed into September where we're going to get some pretty important numbers and data back that will ensue more volatility for the dollar. But as you can see, traders are already betting and pricing in this potential weak dollar, and they're taking bets and trades, and people are making financial decisions based on this prior to it even coming out. So a lot of this move is already premeditated and happening. As you can see, NZD has taken a massive leap to the upside. Of course, it's bouncing right off support, and of course, ironically, it's bouncing right off the bottom of this wedge. And it just goes to show a lot of the time, as much as people want to make fun of technicals, they often align with fundamentals, and there's no disputing that. There's time and time again where you can pull up many examples of why technicals often validate fundamentals. And as you can see again, let's just look at the dollar one more time. We are heading down to extreme lows prior to all of this news to come out. If I was to just click this, this will have latest updates of potential things coming out on the dollar and a bunch of other suggestions on what people are seeing in the dollar. Enough of that. Let's pull up my Dalio bot and see how it is doing during all of this volatility, especially with the NZD pair. Here is my Dalio bot. As you can see, there is currently $10,486 in this algorithm. I started it with $9,954. Now, it's very important for me to understand what I am looking at here. And what I'm looking at is all open trades. Now, the reason why I bring this up is because I'm taking a note from my previous mistake on the Fed bot. And of course, none of this is ever financial advice before I get into it. Now, with that being said, this is merely just for your entertainment. Now, what I took away from the Fed bot experience was I need to understand my margin levels. The margin level is basically saying how much capital I have available to take more positions. And that's it in layman terms. Now, typically with this number at 1,600% margin, that is relatively safe for my liking. Now, if I go down below 1,000, I probably will come up to this button right here and go ahead and click it, and this will turn off algo trading. The reason why I would do this is because it will actually stop the software from taking on more positions. Now, remember what I said about margin. The more margin that is available, the more trades the software can take. So if I turn off auto trading, it disables the software's ability to take on more trades. More trades mean lower margin. Each time you take on a new trade, you're lowering that margin. So if I dip below 1,000 here, which I'm going to be watching pretty actively, I'm going to turn off the trades so that way the algorithm does not take on more trades and it'll just manage the ones that are currently open. Let's go ahead and look at NZD USD and show you exactly what I am currently in. Now, all these green lines are open positions, and the green lines are representing my entry, so where the software actually took its trade. Now, as you can see, I have multiple trades open. Now, what I'm looking for here is to get some type of reaction to the news that will give me some type of relief on the buy pressure of this pair. So if I pop back over to TradingView and I go to the DXY, I will see the dollar news that is coming out. So I have a FOMC meeting tomorrow, and then I also have a speech from Jerome later this week. Now, I believe just those two things alone, depending how they go and what is said, can actually have this pair come down further into support and have some type of reaction to the news, even though the technicals are showing that's where price would typically go and have some type of reaction. Now, zooming out a bit, I believe that this chart will find some type of relief bounce from the news. I shot this to give you guys some prior knowledge as to what's going on in the US dollar, and as you can see, we have a lot of news coming up that is already pricing in tons of volatility for the US dollar. And then I wanted to show you guys what my algorithm is doing, what it looks like, what I will be doing with it. And one thing I wanted to mention also is my algorithm, I have already built in a 15% stop loss. So regardless, worst case, I lose 15% and the story goes on and the algorithm keeps trading and I potentially recoup it. Now, that is the beauty of a stop loss, is now I don't have the vulnerability of having my account taking a loss that I can't afford. And nobody should ever be in a position that they take a loss they can't afford, because that's the one thing that you can actually impact is how much you lose. So with that being said, I have stop losses in place. I'm looking at my free margin to see when or if I should even turn off my auto trading. But for now, I'm just sitting back. I'm going to wait for the news to happen and see if I can get some type of dollar strength to drop this NZD USD pair, because right now the New Zealand is strengthening so much because the dollar is weakening. Obviously, the chart going up is showing NZD strength, also highlighting dollar weakness. So I'm looking for some type of pullback on the NZD, and I think we may experience it, worst case, up at this moving average area to come back down, and also this resistance right here. So worst case, we pull up into this area and there is some type of reaction back down to alleviate some of those positions, but also give me tons of profits because I'm so heavily sized in on the top end of this move that I think I'll make some pretty good profits if this thing does reverse here. But nonetheless, wanted to give you guys a quick update, and I want to do this a little bit more often to show you guys what I'm looking at and what I'm doing during these trades when the software has scaled in a bunch. If you enjoyed this video, please leave a like and or a comment. And like always, my friends,